Well, 2021 is over and now we can look forward to a hopefully very boring 2022. Or maybe not if you're in the stock market. You ready? An insurrection at the Capitol in Washington, a new president, an old Federal Reserve chairman, a new COVID variant, an elastic labor market, rising inflation, soaring crypto prices, constant chatter of a central bank taper, plummeting crypto prices, geopolitical tensions, another COVID variant, gas prices going crazy, Elon Musk being, well, even more like Elon Musk, the Turkish lira tapering becoming real, and of course, meme stocks. Through all the madness of 2021, we laughed, we cried, and the stock market went up and up and up. The Dow Jones Industrial Average gained 18.7% on the year, while the S&P 500 grew by 26.9%, and the tech-heavy Nasdaq added 21.4%. So the question is, what about 2022? Well, the most popular prediction is that 2022 will be a relative return to normality. But although it's almost impossible to be sure of what will happen in 2022, we can get an idea of what may come by looking at what the general sentiment is from various sites like Millionaire investors and market analysts. So stay with me because in the next couple of minutes we're going to see how people believe markets will go this year and maybe give you a hint about how to invest. Before we go on though, how about you be the first subscriber of 2022 or give me the first like of the year? That would be awesome. So the biannual CNBC Millionaire survey finds the youngest amongst America's wealthy investors much more bullish and aggressive headed into 2022 than their investing peers from older generations. While the overall outlook from millionaires on the economy and stock market is barely bullish, according to the survey data, millennials see major potential for stock gains and continued interest in risk-on trades, including cryptocurrencies. So let's take a look at the numbers, shall we? 48% of millennials expect to increase their crypto investments in the next 12 months. For many, this is a doubling down on crypto, as the survey finds more than half of the millennial millionaires said at least half of their wealth is in crypto. Now, 52% of millennials think the S&P 500 will be up by at least 10% next year. 39% are even more bullish, expecting those gains to be above 50%. This is more than triple any other generation's expectations for stock gains over the next 12 months. Then 61% of millennials believe the economy will be much stronger next year. In all, 93% believe the economy will be stronger versus 41% for all millionaires. The CNBC Millionaire survey was conducted by Spectrum Group and surveyed Americans with investable assets of 1 million or more. Now, some of the differences between millennials and the rest of the survey audience are stark. Inflation is the number one economic concern amongst millionaires in the survey, while the millennial millionaire subset isn't worried about it at all. And that finding highlights the generational nuances in the data and the question of whether younger investors are prepared for what inflation, and a Fed worried about inflation, can do to the stock market. I mean, Fed rate hike cycles haven't been disastrous, but they have not been very good for stocks. Across the 17 previous Fed tightening cycles back to World War II, the Dow Jones Industrial Average and S&P 500 index have struggled to post gains according to the CFRA research. In the 12-month period, once the Fed starts raising rates at least 3 times, the S&P 500 rose a median of approximately 3.5%, and whether it gained or lost in any single period was a little better than a coin flip. Stocks gained in price 56% of the time. Now, the 1970s period of inflation was known as a lost decade for stocks because the compound annual growth rate in the S&P 500 was 1.6%. The index posted a 5.8% total return, but that is including dividends being reinvested and accounting for over 4% of the gain. Of course, this difference between generations is normal since this generation has not experienced an inflationary environment, and a boomer will be quick to point to 70s and 80s. But this doesn't mean that the 1970s style's inflation is about to repeat itself, and millennials may live in a world which they know is less likely to repeat that experience. Even though millennials did not cite inflation as a risk to the economy, they were almost evenly split, with 45% saying inflation would be temporary and 48% saying it would last a long time. Though for millennials and Gen Z investors in their 20s who were just becoming teenagers during the Great Recession, recent performance could lend itself to overconfidence in the stock market. At the end, most millionaires taking the CNBC Millionaire survey believe their assets will be the same at year-end 2022, and they anticipate a rate of return between 4 to 5% in 2022. Now, millennials believe their rate of return will be higher, with 39% predicting 10% plus in 2022 and another 32% expecting at least 6 to 10% from their investments. On the other side, market experts are worried that the extraordinary returns stocks have produced in recent years cannot be sustained. A recent survey of 400 investment professionals conducted by CNBC finds more than half, actually 55%, expecting the S&P to return less than 10% next year. And many think the index will either be merely flat. Every year, the major fund companies such as Vanguard Group release their investment return assumptions. Vanguard's 2022 outlook says US stocks are more overvalued than any time since the dot-com bubble, but there's no clear correlation in the historical data saying that inflation and rising rates would necessarily cause an abrupt end to the valuation momentum. As Vanguard concluded, our outlook calls not for a lost decade for US stocks, as some fear, but for a lower return one. Now, Mitch Goldberg, president of investment advisor firm Client First Strategy, said that in the next 10 years we expect a positive return of anywhere from 5 to 8% annualized. I'm comfortable saying that, but I'm not comfortable saying next year only expect 5%. Whether the S&P 500 repeats its nearly 30% gain of 2021 or reverts to its long-term annualized average of 9% in 2022 or even worse, being realistic about the long term and having a plan for it is more important than being remembered as the one who got next year's S&P 500 call right. Preserving wealth while covering living expenses and taxes is the number one goal, and that requires a realistic understanding of what can be earned from investments year in and year out. And over a longer period of time, with more time in the market, the best investors will learn to adjust expenses to that realism. Okay guys, so that was the first video of 2022. I hope you enjoyed it, and I just want to say thank you to every single one of you that has been following this channel from the beginning. I wish you all have a great investment year. Hit that like button if you want, for the best is yet to come. See you all soon guys. Bye bye.